Every trading day, massive opportunities show up, but only a few know how to consistently spot them and capitalize. Our prop traders at S&B are experts at identifying the biggest intraday movers that offer the highest profit potential. In this video, we're going to teach you exactly how they do it. I'm Mike Bellafiore, co-founder of S&B Capital, a top proprietary trading firm in New York City and Miami, where we've developed numerous 7 and even 8-figure per year traders. If you're serious about leveling up your trading, you're in the right place.
What makes a stock a great candidate for a day one earnings play? This stock went up 20% intraday during the regular trading hours, while most market names and most earnings day ones on the same day went nowhere. Usually once we hear about a big intraday move like this, it's too late. The move is over. So how can we identify top candidates for day one earnings that make these significant clean moves ahead of time? Now that we're in the thick of earnings season, I thought it would be a great time to go over my favorite day one earnings scanner. It's simple, it's easy, it makes tons of sense, and it's tested. This variable we use in this scanner is so effective that we use it as a key filter in one of our fully automated day one earnings models. Here's the model's equity curve over the last few quarters. This is how we discovered this variable and turned it into a scanner. Now, before the market opens, we check the scanner every day to narrow our search for potential day one earnings plays. So by the end of this video, you will understand how to create this variable mathematically, how I code it into my thinkorswim platform, why this variable works, and how I use it to find great earnings plays. So let's dive in. Why do we use this? Earnings season can be overwhelming with hundreds of stocks reporting earnings. We need a way to narrow our focus in the morning so that we can prioritize our time during pre-market prep, dive deeper into the names with the most potential, study the earnings calls, right, the transcripts, the earnings releases, and the daily charts of the best names. Right? We want to know what to watch after the market opens for the setups that we like to trade. There are plenty of dynamic variables that make an excellent earnings play. These dynamic variables are aspects of the stock that develop after the market opens. Things like liquidity, relative volume, price action. But our focus today is on the single most critical static variable for these plays. A static variable is something that does not change throughout the day. It's an aspect of the stock that we know before the market opens. This allows us to narrow our symbol universe during pre-market prep and focus only on the best names. So we refer to this variable as extended hours percent AVOL. It's calculated by accumulating the volume done in the after hours in pre-market and dividing by the stock's average daily volume. So what does this measure? It measures the relative volume in the extended hours. And more specifically, it measures the percentage of the stock's average daily volume printed in the extended hours. So for example, the stock I showed earlier printed over 35% of its average daily volume in the extended hours. You can see that in the yellow label on this chart. The cumulative volume for the after hours pre-market and combined markets is plotted below the price chart. Later in this video, I'll show you how I code this into thinkorswim. You can also use ChatGPT to translate this code into PineScript or any other language that might be compatible with your platform. But first, I want to show you why this is important, how we use it, and what specific values we look for to catch the best opportunities. Why is this important? As traders, we want volatility, range expansion, and trends. And volume is the fuel for these things. The earnings announcement will happen either in the after hours or in the pre-market. And when the announcement occurs, we often see a volume surge in the stock and price spike in either direction. This is usually due to algorithms and active traders hitting the bid or paying the offer based on the immediate release. The volume that flows into the stock here is essential. Then we'll see how the stock acts after this initial spike, right? Does it hold levels? Does it continue? Does it reverse? As this price action unfolds throughout the extended hours leading up to the close, we can assess the trading volume to determine if there is interest in the stock following the earnings announcement. Volume during the after hours or pre-market will be the tip off, right? It's the tip of the iceberg because large traders, hedge funds, and big institutions can't come close to executing all their shares during this period. There's not enough liquidity. However, there will likely be trading activity following these earnings releases, and this activity can indicate how interested the participants will be once the market opens. Volume can help us measure this interest and activity. Volume can help us get a sense of how significant the catalyst is. Volume can help us anticipate how in play the name may be once the market opens. To determine this, we simply compute the extended hours volume as a percentage of the stock's average daily volume. This percentage shows how much interest, activity, range, and trend we might see once the market opens. So how do we use this? Well, my quant team initially tested this variable in a day one earnings model that seeks to identify intraday trends in these earnings names on day one after their earnings announcement. And it was one of the most impactful components of the strategy. The data clearly showed that we want to see the stock print at least 20% of its average daily volume during the extended hours, and ideally, we want it to print much more than 20%. If the name reports earnings after hours, we can examine the after hours volume alone or the combined volume during both the after hours and the pre-market periods. We can examine the pre-market volume alone if the name reports earnings before the market opens. Either way, anything below 20% is no bueno. There's a significant difference in the odds of an earnings name trending meaningfully when it is printing at least 20% of its average daily volume. And the more, the better. Some stocks may print 50% or 80%, which is even better, right? But we're not interested in looking at anything below 20%. Now, of course, other variables go into this strategy, and this single variable alone is not a strategy. Our goal with this variable is to simply narrow down our universe, increase our odds, and direct our attention to the right pool of candidates, right? It's the first step in our strategy. The data was so compelling that we decided to turn this into a scanner. We use this scanner every morning during the earnings season to determine which names to investigate further during our pre-market prep. We simply input all earnings names, sort by extended hours percent AVOL, and scan the list. Now we know which reports to dig into. Of course, we are all aware when the Metas and the Microsofts of the world report earnings. But there may be some names on the scanner that we would have missed. Like most of the trades our model takes, right? I would not look at many of these names if it weren't for the extended hours percent AVOL scanner. Like PDD here that did 128%. CFLT did 42%. IONQ 24%. HSAI 39%. And we also want to ensure that the name we're looking at is liquid. If we have a stock that barely trades volume during the day, this metric will be less useful. So you can also limit your universe to stocks that average at least around 4 million shares a day. So how do we build this indicator? I'll show you how I do it in Thinkorswim. So here's my script editor, right? This is the entire script. And I'll walk through this. First, we're going to write a declare lower, which places the plots of this indicator into the subgraph of our chart. Then we define the inputs. These are the parameters that we can change in the indicator settings. I like to set the look back period for the average daily volume to 21. You can set it however you see fit. This will use the AVOL length to define how many daily bars to look back when calculating the average volume of the stock you are looking at. Then I provide an option to subtract the first bar of the after hours from the after hours cumulative volume calculation and set the default to yes. I do this because most of the time, there will be a closing auction print from the previous session that will print in the first bar of the after hours. Thinkorswim will include this volume in that first after hours bar, even though technically this was the closing print of the previous day. This will significantly skew the data, so I will remove it. You can see here in this Google example how large this closing print volume is and how much it skews the data. The first subgraph shows the percent AVOL including this print, which is around 35%. And the second subgraph shows the percent AVOL excluding this print, which will be around 19%. Big difference, right? And this is why I do this, particularly on Thinkorswim. Next, I'll calculate the average daily volume. I define the volume bars we are using in the calculation with daily volume, making sure to set the aggregation period to day, which will use the daily volume bars. I then define the average daily volume with AVOL, setting it equal to the average volume bar, looking back the number of bars we set for AVOL length, which is 21 in this case. I offset this calculation using the bracket 1, shifting it back 1 bar so that it does not include the current day. I then calculate the after hours volume. So we first define the after hours with AH by starting any time after the regular trading session ends. This is a built-in ThinkScript function. We then define the first bar with first AH volume so that we can exclude it by stating that if there is no after hours bar before it, then it must be the first bar, so take the volume of that bar. We then define the after hours cumulative volume with AH vol by first checking if it's the first bar, and if we want to subtract the first bar, right? If we do, then we count that bar as 0, else take the volume. Then we cumulate the after hours volume by adding the current volume bar to the current cumulative tally. Then we plot it with AH volume, first checking that it is the after hours, and if it is, plot it, and we set a color. We then do this exact same thing with the pre-market volume, right? We define the pre-market using the ThinkScript built-in function, define the pre-market volume. This time we don't have to worry about that first bar, right? If it's the first bar, take the volume. If it's after the first bar, then add it to the cumulative tally and plot it and give it a color. We can now define the total extended hours volume with COM vol by adding the pre-market volume to the after hours volume, and we plot it. First checking that it is the pre-market, and if it is, plot the combined volume. We make this a dashed line and give it a color. Now we will add chart labels for these statistics by using our predefined definitions inside the ThinkScript built-in function, add label, which allows us to add labels to our chart. Now we have labels that give us all these numbers, including the percent average daily volume for each, using the formula cumulative volume divided by AVOL times 100. For each cumulative volume, we use our predefined definitions respectively. Now, as the pre-market bars print and we are doing our scanning for the open, we have percent average daily volume metrics for the after hours, pre-market, and combined. Lastly, we will create a plot for the combined extended hours percent AVOL. So we'll call it percent AVOL, and we first check if it's the after hours, and if it is, we use the after hours volume, else we use the combined volume. If you notice a little hitch in the plot when it crosses over to the next day, this is because the average daily volume is now shifting 1 day forward. We could fix this by creating 2 average daily volume definitions to maintain consistency, but I don't worry about this, right? And so finally, we add a label. Turning this into a plot allows us to use this plot as a column in our watch list. So this screenshot here was taken about an hour after the close. So these values have a long way to go until the market opens tomorrow. And you can use this scanner for all stocks, not just earnings names. So I hope this helps. As always, Let me know everything I did wrong in the comments below. I'll try to answer all your questions. Thanks for tuning in.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.